Hey everybody, welcome to Money's No Object. I'm your host, Dylan Howell. This is episode number 253 of our YouTube channel and podcast, and I could not be more excited to continue sharing with you guys personal finance topics that I think can be useful for you in your long-term financial journey. Today, we are going to be discussing life insurance, and this is just because I think that life insurance is such a big part or can be such a big part of your financial planning, and a lot of people miss the boat on exactly what they need. So I want to talk about life insurance, what it is, what you might need, and the different types that you have to choose from, and what I think you should do as far as your life insurance choices. So stick around for all that and more in today's episode. But before we get started, if you could go down below, hit the big red subscribe button, like this video, leave me any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcasts, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and stay accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, planning your financial future and building financial goals that are specific to you and your family's life, pushing towards those goals over the long term, and then ultimately pushing you towards long-term financial freedom, which is what I hope for every single person who is listening or watching this show on a day-to-day basis. So let me just ask you this question. Is your family going to be okay if something were to happen to you? And when I say something that happens to you, I'm not talking about you get injured, and I'm not talking about it's something temporary. I'm talking about something happens to you and you are gone, right? You pass away. Is your family going to be okay? That's a real big determination that I think a lot of people fail to make. And a lot of people fail to make this determination because it is very morbid, right? People don't want to think about their own death. They don't want to think about the possibility of not being around for their family. They don't want to think about what may need to be done in order to set things in place if something were to, God forbid, occur in their particular life. Okay? Life insurance is this big thing. Okay, there are several things you can do to plan for what happens after you're gone. You can have wills and estate planning documents and all these different things, right? But life insurance on a financial scale is the biggest thing that you can do to take care of your family financially when you are gone. And a lot of people don't know, how do I go about getting life insurance? Is this too much or not enough life insurance? What type of life insurance should I get? And they just forego the process altogether because it seems like a very arduous process, right? But what you first need to determine is if you need life insurance. And let me just spoil for you real quick that most adults need life insurance. But we're going to talk about, if you need life insurance based on different parts of your life, okay? Now, before we jump into that, let's just real quick remind ourselves exactly what life insurance is. All it is a contract between you and an insurance company that in exchange for some monthly payments, we call those payments premiums by you, right? There is a prearranged sum of money that is guaranteed for your beneficiaries or your loved ones when you pass away. Okay, that is what life insurance is at its baseline. Okay, and the beneficiaries who receive this payout will get some peace of mind when it comes to how they're going to pay their bills, keep a roof over their heads, and put food on the table, all of the important things. That is why life insurance is so important. Because think about, if you are a primary breadwinner and, maybe you're a man, your wife stays home, or your woman, your husband, stays home or doesn't make near the money that you make or something like that. Right? And you have this lifestyle, you have this house, you have these kids, you have all these things going on that you need to maintain with your bills that you pay and with the payments that you make monthly and things like that, right? And so if the income were to go away because somebody passes away, what are you going to do? And if you don't have life insurance, then the answer is sell a bunch of stuff or have to really step down in lifestyle or go deeply into debt to try to maintain a lifestyle that you shouldn't try to maintain. And that's something I don't want you to do, right? And in not wanting you to do that, I want you to have life insurance in place. That way, if something were to happen to you, your spouse or your loved ones or your children, right, they can be taken care of in the right way, okay? So let's just say, first off, you are young and single. Okay, so if you're young and single, there is no urgent need for life insurance because the only person you're looking out for is you. What are you leaving a life insurance sum behind for if it's just you, right? No one else is dependent on your income for anything. Now, if you have the option to take out some group life insurance through your employer, it's a good idea. And this is because it won't cost you anything getting it through work. But if you're lumbered with student loan debt, these days it's unfortunately likely that you will be, then a life insurance policy to cover your income while you're paying off this debt is a smart move. Okay. But nonetheless, okay, life insurance is not something that is really needed if you are young and single and out of debt and in a place where you're just trying to build your financial life. You do not need life insurance, okay? Now, let's say you are newly married, okay? Not single anymore. Now we're married, all right? Well, congrats. You're about to start what's hopefully a long journey together, which may involve getting a mortgage at some point or buying other types of assets, okay? Now, being married means that you're there for one another through the good times and the hard. You're both contributing to the partnership in some way. And if you're busy paying off debt, not to mention a mortgage, having some life insurance is a wise thing to protect your spouse if anything were to happen during the journey, okay? So if you have a mortgage, right, this is a big debt that hangs over your head for a long period of time, typically, okay? And if it's just you and your spouse, then you need to make sure that that mortgage can get taken care of with any life insurance that you may leave behind. Not to mention if you have other types of debt, which I hope you don't, but if you do have other types of debt, which is typically the case, then you want those debts to be able to be taken care of with the life insurance payout as well. Okay, so if you're newly married, you could need life insurance. Now, if you are just renting right now and you're newly married and you have no other debt, then the need for life insurance is extremely low. There's really no need for either of you to have life insurance. But the more debt that you have, if you have a mortgage, things like that, then you are going to need to pick up life insurance. Then, if you have young children, okay, having young children or teens, we're talking under the age of 18, right? This means that you have dependents, meaning that they depend on you. They depend on your income. They depend on your ability to work, right? Your income covers the cost of childcare. It covers school fees. It covers medical bills and everything else they need. Protect this income with life insurance until your children are college age and able to support themselves with their own paycheck. A proud moment for them and you, okay? So having children means that you're going to need to have life insurance because now there are actually people who they rely on your income. They rely on you making money. Now, let's just take a step back real quick and let's say that you are married and you have no debt. And let's say that you are a stay-at-home mom or a stay-at-home dad, right? And you don't make any money. Well, if you don't make any money, then there's still a reason that you may need life insurance. Because let's just say that you stay home in order to take care of the children so the children don't have to go to daycare or something like that, right? Well, if something were to happen to you, even though you don't bring any money into the household, you are making a real impact on the budget of the household. Because if you were to be working, then you would have to be paying daycare bills for your children. Okay, well, the fact that you're not working means that daycare bills are not having to be paid. Well, if something were to happen to you, then your spouse would likely have to put your children into daycare while they continued working. And so this would be a reason that you would need life insurance because it would help to take care of your child if something were to happen to you. Okay, so regardless, if you make money or not, if you have young children, getting life insurance is absolutely a good idea. Now, let's say you're an empty nester. Right? You're married or you're not married, whatever. Your children are gone. You are an empty nester. Let's say you're a couple in your 50s. Okay, and the kids have left home and they can support themselves. Hooray, right? But you're still paying off your mortgage while working towards retirement. You need some life insurance to protect that income. Right? The untimely death of you or your spouse could leave the other with debt. And that's the last thing either of you want heading into retirement. Okay. Again, if you are still paying off that mortgage, you need to have some life insurance. You need to have life insurance sitting aside. That way your spouse can just reach over and pay that off and just pay off that mortgage. Now, if you are past a point where, you've got a bunch of retirement money saved up, you're already past age 59 and a half when you can start taking distributions from your IRAs and things of the like, your retirement accounts, and you have plenty of money set aside, then the life insurance may not be as necessary. But if you're in that sweet spot, which not so sweet spot, right? That weird zone of I'm an empty nester, but I'm not retired yet, then you still need to have life insurance as long as you are still paying off your mortgage. But if that mortgage gets paid off, then the need for life insurance nearly goes away. Okay, now let's say you are retired. Now, just because you're retired doesn't mean it's too late for life insurance if you need it. Okay, you could get a term life policy to cover you until your debts are paid off and you are self-insured, meaning you have built up enough assets in order to live on those and to leave them behind to people that you care about, like your spouse or your children or whatever, right? Being self-insured means that you're debt-free and you have enough in the bank to look after your dependents if you die. Life insurance will cost you more if you're buying it when you're older, but a small term life plan, which is short in length, won't hit your pocket too hard. Okay, so if you're retired, most people who are retired don't need life insurance. Okay, now life insurance can be a decent option in specific cases, but most people who are retired and have built really good nest eggs for themselves and they don't have any debt, right? Why do you need life insurance? You don't need life insurance. Okay, now I will say this. Okay, if you can get cheaper life insurance policies, it can be beneficial to you because life insurance is tax-free, especially if you have a bunch of assets in retirement that are taxable, right? They are traditional accounts, things like that, right? That are going to be taxed when somebody else inherits them, okay? But life insurance is going to be tax-free. The death benefit is tax-free to whoever receives it. Okay, so this is really, really important to understand. And if you're in any of these different stages of life, just give yourself a lot of grace and just be thoughtful about your particular situation and understand what's going on and understand whether or not you need to take on some life insurance because most of the time, right, for most healthy individuals that are, let's say, 50 or younger, term life insurance policies are not going to be crazy. Now, as you get older, those longer terms are going to get more and more expensive, and whole life will get more and more expensive as well, right? So you don't want to overpay for insurance, but if you are of good health and you need it, getting life insurance can be very, very worth it. Now, this really brings me to the whole idea of the different types, because just because you need life insurance doesn't mean that you just go and buy some set life insurance, okay? You don't know what type of life insurance you need to buy. What is the amount of years that I need to buy it for? What is a good cost for this life insurance? So let's talk about it just a bit. There are really only two varieties of life insurance, okay? Now, you'll hear all these different words and terminologies thrown around, but the oldest varieties of life insurance are term life and whole life, okay? Now, not that insurance companies haven't tried to make it more complicated to reach a broader range of customers. Shopping for life insurance may not be as fun as reading a spy novel, but they have this in common: the more deeply you delve, the more complex everything gets. And that's the problem, right? The problem is that it's very complex the more you want to understand your life insurance policies. And so I'm here to really get rid of a bunch of the weeds for you. Okay, but when you get back to the basics, you want to know what's the difference between term and whole life, and what do you need? What is better for you and your needs? So let's start by talking about term life insurance. Okay, term life insurance is perhaps the easiest to understand type of insurance, okay, because it's straightforward insurance without the bells and whistles. The only reason to buy a term policy is because of the promise of a death benefit for your beneficiary should you pass away while it's still in force. Okay, as the name suggests, the stripped down form of insurance is only good for a certain period of time, whether it's 5 years, 20 years, 30 years, whatever. After that, the policy simply expires. And a lot of people look at term life and they go, well, term life insurance, that's a waste of money. Why would I just pay for this insurance and then, not get anything out of it? Well, let's think about all the other types of insurance that you pay and you get nothing out of them. Okay, let's talk about your car insurance that you renew every 6 months, that if you don't use it, they're not giving you your premiums back. Yeah, it might get a little cheaper because you're a good driver or whatever, but they're not giving you those premiums back. They are going to keep those premiums. The life insurance company is going to keep those premiums. What about your homeowner's insurance? If you don't use it, right, what's the point, right? If you don't use it, then you're just paying for something that may happen over a long period of time. The same is true for term life insurance, okay? As long as you have a term life policy, what that means is that for some particular period of time, you're going to make these premium payments, okay, these payments to the life insurance company. And if something were to happen to you during that time period, then the death benefit that you chose and that you and the life insurance company agreed on would be paid out to your beneficiaries. Otherwise, if you get to the end of the policy and nothing has occurred, you're still living, right? Heart still beating, then you are just going to have an expired policy, okay? And you can go get a new term life policy if you can still apply for one, or you can get some other type of life insurance, maybe a whole life policy, and we'll talk about those here shortly, okay? But the key here is that after it expires, it's gone, okay? And all the money that you put into it is gone as well. Now, that may not sound like something that is too attractive, but let's talk about the benefits, okay? Because of these two attributes, that it's simple and it has a finite duration, meaning that there is a fixed amount of time that the term life policy is going to exist. Term policies also tend to be the cheapest, often by a wide margin. Okay, if all you seek from a life insurance policy is the ability to protect your family when you die, term is likely the best fit. And honestly, the reason that I will tell you that I think term life overall is going to be the best bet for most individuals is because what other reason are you buying life insurance? You should only be buying life insurance to protect your family when you die. Okay, so if that's the point, then term should be the best fit. Right? While no two families are exactly the same, new parents sometimes purchase insurance that lasts just long enough for their kids to finish college or join the workforce full time. And we talked about this, if you have kids that are still in the house, you have dependents, then you're going to still need life insurance, right? You're going to still need some life insurance. And so people will get term life insurance that only lasts until their kids would have completed college or their kids would have gotten out of high school or something like that. Now, according to the online brokerage Policy Genius, which is a really, really useful website, I'm not sponsored by them or anything, but Policy Genius is a pretty cool website. You can go in and put in your information, and you can pick the length of your term and the amount of death benefit you want, and they'll give you the different quotes from the different companies for free. Okay, now the average 30-year-old male can get a 20-year term policy. Okay, 20 years that you will make payments, right, with a $500,000 death benefit. $500,000 would be paid tax-free to your beneficiaries if something were to happen to you. Okay, he can get that for $28.73 a month. Now, because of her typically longer lifespan, the average 30-year-old woman can purchase the same policy for only $23.02 per month. Okay, so let's say $25 a month, or we can even round up and say $30 a month. Okay, $30 a month is going to be what? $360 over the course of a year. So you're telling me I can spend $360 a year to get $500,000 of death benefit coverage over a 20-year period, right? So ultimately, over that 20 years, right, you would pay $360 a year for 20 years. So you're going to end up paying $7,200 over the life of the policy. I would say that $7,200 is a good amount of money that you would be willing to put away in order to get $500,000 worth of coverage, right? That is 1.44% of the total death benefit that you would actually pay in over a 20-year period. And if something happened to you within a month, guess what? Your beneficiaries could still receive that death benefit. Okay, so this is a very cost-effective way to get insurance and can allow you to take care of your family in a very, very real way. Okay, now that was the benefits of the term life policy. What are some drawbacks? Now, a variety of factors will change these prices, of course. So, for example, a larger death benefit or longer length of coverage will certainly increase the premiums. Also, most policies require a medical exam, so any health complications could raise your rates above the norm as well. So, especially with a term policy, because it lasts for a finite amount of time. They want to make sure that you're going to be alive for that finite amount of time, or else premiums may go up. Now, because term insurance eventually expires, you can find yourself having spent all that money for no purpose other than the peace of mind. Also, you can't use that amount of money for anything else, right? That money basically just goes to the life insurance company, and if you don't use it, you lose it, okay? And we don't want to lose it. We don't want to pass away, right? But it is a reality for a lot of people, and it's the reason that we buy it in the first place. So the pros of the term life policy is that generally it has a lower cost and it is simpler to understand, and it can really help you to take care of your family with that death benefit in a very cost-effective way. The cons: protection is available for a fixed amount of time just for the term of the policy, and it can't be used for anything else other than just that death benefit, okay? So term life insurance, very simple, very easy to understand. And if you are somebody who needs life insurance, I would really push you towards looking into term life insurance before you look into any type of whole life insurance, just because of the cost benefit of the term life versus the whole life product. Now, a lot of people believe in whole life, so we're going to talk about it. Okay, I believe in term life. I think term life is the best thing that you can use to take care of your family, right? And you can do so very cost effectively. But what about whole life insurance? Because this is a very broad stroke, right? This is a very broad array of life insurance products. So whole life is a form of permanent life insurance which differs from term insurance in two key ways. For one, it never expires as long as you keep making your premium payments, and it also provides some cash value in addition to the death benefit, which can be a source of funds for future needs. Okay, now, so what are the benefits of the whole life policy? Okay, so the whole life policy, again, it is going to last for your entire life, and it will build up some cash value along with that death benefit. Okay, so the benefits here: most whole life policies are level premium, meaning that you pay the same monthly rate for the duration of the policy. Now, this is also true of term life policies. Term life policies are also more known for being level premium because they are so cost effective. Okay, now those premiums are split in two ways. One part of your payment goes to the insurance component. So this goes towards the actual death benefit. One part of the premium you pay goes towards the actual death benefit that your loved ones would get paid if something were to happen to you, while the other part goes to build a cash value, which grows over time. Many providers offered a guaranteed interest rate of 1% to 2% annually, although some companies sell participating policies which pay unguaranteed dividends that can increase your total return. Not to mention there's the whole variable life and indexed life insurance and all these different things, universal life, where you can have that money invested and all these different types of things. But I have said this before, and I'll say this again. I know we are not in the drawbacks of the whole life insurance argument just yet. Okay, but I'll just give you my opinion before we get there. We don't want to invest with insurance. Okay, insurance is something that you pay for to make sure that if tragedy occurs, you or your loved ones are covered. Okay, this is money that you put away. You're not worried about growing this money. Okay, that's why term life, given that it is cheap relative to other types of life insurance, is a good value proposition. You're not paying much at all given the particular death benefit that you can get for a very, very small amount of money. Okay, but with whole life, you are paying greater premiums, and we haven't gotten to that part yet, but you're paying greater premiums, and not all of it is going towards just that death benefit. Some of it is going towards a cash value, which you aren't even guaranteed to receive, or your loved ones aren't even guaranteed to receive if something were to happen to you. Okay, so let's continue on. All right. Early on, the amount of the whole life premium is higher than the cost of the insurance itself. As you get older, though, that reverses and the cost becomes less than that of a typical term policy for someone of your age. This is known as front-loading your policy. Now, at a later date, you can borrow or make a withdrawal from your cash value amount, which grows on a tax-deferred basis. So there is some tax benefit to whole life, right? But again, you're not going to be making great rates of return because this is not where you should be investing your money. And not to mention, there are very, very high fees and high expenses associated with whole life that if you really want to invest your money, you can invest your money in a brokerage account or in a retirement account, and that money will be far better suited there, okay? So again, my opinion, but nonetheless, all right? In that sense, it's much more flexible a financial tool than a term policy. Loans from your policy are tax-free, although you'll have to pay income tax on the investment gains from any withdrawals. Okay, this is something that you need to take into account if you're trying to choose between these two different products. Again, if you're trying to invest for some reason in the future, then just invest, right? Put the money away into mutual funds, into ETFs, into stocks, into bonds, into some portfolio of your choosing within a brokerage account, within an IRA, within a 529 for your kids' school, within whatever type of account it may be, right? And don't invest within a cash value policy that is not going to provide you as good a rates of return, and it's going to be very, very high in fees relative to any other type of investment account that you have. Now, those are the benefits that we have here, right? And I threw in some drawbacks that come to mind when I think of whole life policies. Now let's look at the list of drawbacks. Now, unfortunately, the death benefit and the cash value aren't completely separate features. If you take a loan from your policy, your death benefit will go down by a corresponding amount if you don't pay it back. Meaning if you take some of that cash value, your death benefit can go down. Okay, if you take out a $50,000 loan, for instance, your beneficiaries will get $50,000 less, plus any interest due if the loan is still outstanding. The main disadvantage of the whole life insurance is that it is more expensive than a term life policy, and it is by quite a bit. Okay, it's not just a little more expensive, it is a lot more expensive. Permanent policies cost on average between 5 and 15 times more than term coverage with the exact same death benefit. For a lot of consumers, the relatively high cost makes it hard to keep up with the payments. A June 2016 report by the Wharton School at the University of Pennsylvania found that roughly 25% of permanent life policies lapse within the first 3 years because they are so costly. They are costly products. So they can cost 5 to 15 times more. Now, they do last your entire life, okay? So I understand that. That's something that everybody's like, okay, why wouldn't I want something that lasts my whole life? Well, at some point, you would hope that you were self-insured. At some point, you would hope that you built up enough assets that you don't have to rely on life insurance if something were to happen to you or your family. So you should only need life insurance while you are building up assets in your financial life, and then you shouldn't need it anymore. But people want to have it for their entire lives, right? And it's just so much more expensive. So let's take the same situation where you have somebody who's paying $30 a month for a term policy, okay? And they pay $30 a month for that term policy, and that's $7,200 over the 20-year policy. Okay, 5 times that would be $36,000 for a $500,000 death benefit in that 20-year period, right? So that'd be $36,000, and you'd still have the policy if you're still alive, right? The policy would not be over, right? But let's say that it is 15 times more expensive, okay? So that would be $108,000 you paid over 20 years, okay, just to have that $500,000 death benefit and whatever cash value you actually build up. So it is so much more expensive, and I don't think the cost benefit is actually worth it. But again, this is for you to determine, not for me. Another potential drawback of the whole life insurance is its complexity. With a term policy, for example, you can simply stop making payments if you no longer need the insurance or you can no longer afford it. However, depending on your carrier, whole life policy holders may find a surrender charge of up to 10% of the cash value if they decide to walk away from their policy. Usually this charge reduces as the years go by until it finally disappears. So again, more fees on top of more fees on top of more fees. So the pros of the whole life policy are you have the ability to borrow against it for future financial needs. You can take loans like death benefits and they are tax free, and you can lock in your premiums for life. But cons, okay, are that whole life insurance is much pricier than the comparable term life policies. If you have to let the policy lapse within the first few years, you could face surrender charges, and any outstanding loans will reduce your death benefit. Okay, so I think for your money, term life is the better product. Okay, now again, this is for you to determine because some people can't get term life, especially as they get older. Some people cannot get term life policies, and based on their health, some people can't get term life policies, and whole life is the only way to go, or universal or variable life is the only way that they can go. Okay, I am not hating on somebody who is getting whole life or variable life or universal life or anything like that. I'm just saying I want something that's going to be cost effective for you, especially if you're somebody who is working your way out of debt, or you've got young children and you're just trying to start your financial life. I don't want you to have to fish out a lot of money just for life insurance. I want you to have something that is cost effective and useful for you in case something were to occur in case something were to occur to you or your spouse over some period of time. So term life versus whole life, it's a very, very big argument in the financial world. And it's an argument that you should look more into and make the decision for yourself. But what I hope that you understand and you take away from today's episode is that a lot of people need life insurance, and you may be one of those people who needs life insurance. You may not, right? But you may be somebody who needs life insurance, and it is time. Right now is the best time, because the younger you are, the better, and you'll never be younger than you are today. And the healthier you are, the better. And for a lot of people, especially younger people, you'll never be healthier than you are today. Now, this is not true for everyone, right? And if you need to get some things in order, health-wise before you get life insurance, go ahead and do that too. Okay, but don't put it off forever, and get this done, because it is so important for you and your financial life. And it's so important for those who rely on you and are dependent on you for money, and you want to take care of them. You want them to be taken care of. And this is a way that you can take care of them without having to build up money over a 20, 30 year period in order to do so. This is something that you can go and start the process today to get life insurance to take care of your family in case something were to ever to happen to you, God forbid. So thanks for watching this video. If you could go down below, hit the big red subscribe button, like this video, leave any feedback in the comments down below, and I'll be sure to respond to anything you leave down there. If you're listening on Apple or Spotify podcast, be sure to subscribe and leave me a review on either one of those platforms. Follow me on social media at MNO with Dylan, and that's really good supplemental materials to all the things that I'm putting out in these long form episodes on YouTube and the podcast every single day. And then if you need somebody to help you to build a financial plan and keep you accountable to that plan over the long term, then I can do that. Just DM me on any of the major social media sites and tell me that you are interested in financial coaching sessions, and you and I can begin working together, building financial goals that are specific to you and your family's life, and pushing towards those goals and ultimately long-term financial freedom. So tune in tomorrow as I continue talking about personal finance topics that I think can be useful for you in your long-term financial journey. So thanks for tuning into this episode of Money's No Object. I'm your host, Dylan Howell. God bless.